the next few minutes, I will help you understand the clear differences between Mansa-X and OX Special Fund. You will learn the clear minimums to join, the fees, the returns, and what type of an investor fits for each of the two. Make sure to stick around because at the end of this video, I'm going to be giving you tips which can help you save on thousands of fees. Both Mansa-X and OX Special Fund are multi-asset investment funds. This simply means that the funds invest in different types of assets. This can be stocks, bonds, gold, currencies, and even more, which you're going to see in this video. This type of investment ensures that if one goes down, the other might balance it out. So let's discuss key details for each fund. Mansa-X. Mansa-X is run by Standard Investment Bank and it was started back in 2019. Their minimum join amount is 250,000 Kenyan shillings and their minimum top-up is 100,000 Kenyan shillings. Their fees. They have a 5% management fee per year plus 10% performance fee on profits above 25%. What does this mean? If I invest 1 million Kenyan shillings today and the returns are at 25%, then I will not be charged any performance fee. On the other hand, if I invest 1 million Kenyan shillings and the returns that year are 30%, that means I'm going to get returns of 300,000 Kenyan shillings. From that 300,000 shillings, the 25% returns are not going to be taxed. The amount that is going to be taxed is the 50,000 Kenyan shillings that is on top. And the 10% of 50,000 Kenyan shillings is 5,000. So that's the performance fee that I'm going to pay. The performance. The yearly average for Mansa-X is 17% to 18%, which has been consistent since the fund was first opened or launched. 2024 performance for Mansa-X was at 19.5%. Now let's talk about OX Special Fund. OX is run by Faida Investment Bank and it was started in 2024. Their minimum join amount is 500,000 Kenyan shillings and their top-up minimum amount is 50,000 Kenyan shillings. Fees. OX Special Fund has 6% management fee plus 10% performance fees on profits above 20%. Just as I explained with Mansa-X, now for OX Special Fund, any profits above 20% are going to attract 10% performance fees. For example, if I invest 1 million Kenyan shillings and the profits are 30%, which is 300,000 Kenyan shillings, the 20% of the total profit is not going to be taxed. That means from the total amount of 300,000 Kenyan shillings, 200,000 Kenyan shillings is not going to be taxed the performance fee. So the amount that is going to be taxed the performance fees is the 100,000 Kenyan shillings. So from the 100,000 Kenyan shillings, the performance fee is going to be 10%, which is 10,000 Kenyan shillings. So that's basically going to be the performance fee. Performance. Since OX Special Fund was started in 2024, its performance record is only based on 2024, which was 29.4%. Let's compare the two side by side. Management fee. When you look at their management fee, Mansa-X stands at 5% per year, while OX Special Fund stands at 6% per year. For their performance fees, for Mansa-X is at 10% above 25% profits, while for OX Special Fund is at 10% above 20% profits. When we talk about their minimum investments, for Mansa-X it's at 250,000 Kenyan shillings and a top-up of 100,000 Kenyan shillings, while for OX Special Fund it's at 500,000 Kenyan shillings and a top-up of 50,000 Kenyan shillings. Let's talk about their track record. Mansa-X track record is since 2019, while OX Special Fund is since 2024. Now let's look at their 2024 returns. Mansa-X returns were at 19.5%, while OX Special Fund returns were at 29.4%. If you want a low starting amount and a longer track period, Mansa-X ticks that box. If you can invest more and are chasing higher return rates, then OX Special Fund is for you. But always keep in mind that higher returns often come with higher risk. So here is the bonus. Performance fees are charged only when your returns go above a certain limit. For example, for Mansa-X is above 25, for OX Special is above 20%. That is referred to as the annual rate. If your return is below those levels, then no performance fees is charged. If your returns are above that, then they only charge the profits that are above that level. This is just as explained earlier. So why does this matter? If you know a year is going to be weaker, maybe the markets are unstable, then you could withdraw some profits before the performance fees is calculated. You can then reinvest later when the conditions get better. By doing this, you can keep more of your gains instead of paying a cut to the fund in a higher profit year followed by a weaker year. It's also important to note that some companies calculate performance fees monthly, others quarterly, and others yearly. So this strategy is mostly going to benefit you if the company calculates their performance fees yearly. And therefore, it's important to talk to the fund's manager and get to know when and how they calculate the performance fees. And with that information, you'll be able to know how to avoid or how to be smart with your investments. So that's the breakdown, simple and clear. So tell us in the comment section which one would you choose and why. Thank you for watching and happy investing.